Welcome. What's up, guys? I'm the Excel controller, and today we are taking control of your data. If you work in finance, accounting, operations, or business management, Excel is probably one of the most important tools you use every single day. But here's the problem. Most professionals know enough Excel to get by, but they do not always know how to use Excel like a financial professional. There's a big difference between creating a spreadsheet and building a reliable financial tool. A spreadsheet can calculate numbers. A good Excel model helps you understand what is happening in the business, identify problems early, explain results to leadership, and make better decisions. For controllers especially, Excel is everywhere. We use it for monthly close reporting, budget preparation, forecasting, variance analysis, reconciliations, revenue tracking, payroll analysis, executive dashboards, and operational reporting. The challenge is that finance teams are often working with large amounts of information coming from different systems. Maybe you are pulling revenue data from an ERP system, payroll information from HR, operational data from another platform, and then leadership wants a report by tomorrow morning. Imagine you're preparing your monthly operating review. You receive a report showing revenue is down 5%. Your first question from leadership is, why? Is revenue down because we lost customers? Did volume decrease? Did pricing change? Was there a payroll issue? Are certain locations underperforming? A basic spreadsheet might show you the 5% decline. A well-built Excel model helps you explain the story behind the number. That is the difference between reporting numbers and providing insight. Today we're going to start with the foundation. We will cover Excel basics, terminology, navigation, best practices, and then build examples that show how these skills apply to real finance and controller responsibilities. Before building complex financial models, you need to understand the fundamentals. Let's start with some basic terminology. Workbook. A workbook is the entire Excel file. Think of it as a 3-ring binder that holds the entire financials information. For example, 2026 budget model.xlsx. Inside that workbook, you may have multiple worksheets. Worksheet. A worksheet is an individual tab inside the workbook. Examples: revenue detail, payroll analysis, budget summary, dashboard. Cells. Everything in Excel starts with a cell. A cell is the intersection of a row and a column. For example, A1 is column A, row 1. Cells contain numbers, text, formulas, dates, references. A reference is Excel's way of identifying a cell or range of cells, so a formula knows where to get its data. For example, want to get data from one worksheet to another. Rows and columns. Columns run vertically. Rows run horizontally. A good financial spreadsheet usually has headers at the top, consistent data structure, clear labels, logical organization. Formulas. Formulas tell Excel how to calculate information. Examples: addition equals sum D2, D26. Percentage change equals current pay minus prior pay / prior pay. Average equals average D2, D26. The goal is not memorizing hundreds of formulas. The goal is understanding how formulas help automate analysis. Tables. One of the most important beginner concepts is converting data into an Excel table. Instead of having a random range of cells, a table creates structure. Benefits: automatic formatting, easier filtering, dynamic formulas, and better reporting. Best practices. Here are basic rules every finance professional should follow. Rule number 1. Never manually type numbers into formulas when you can reference a cell. Bad equals 100,000 plus 50,000. Better equals B2 plus C2. Rule number 2. Keep raw data separate from calculations. A good structure is Tab 1, Raw Data. Tab 2, Calculations. Tab 3, Reporting Dashboard. Rule number 3. Make your spreadsheets easy for someone else to understand. Remember, the person reviewing your spreadsheet may not be the person who created it. A controller's spreadsheet should pass the someone else test. Could another person open this file and understand what is happening? Let's do a quick demo. A beginner example, using sample data. Let's start with a simple business example. Imagine we are analyzing monthly sales. Our dataset includes this data as an example, starting with the column headers: date, region, customer, revenue, Jan, East, customer A, $15,000, Jan, West, customer B, $22,000, February, East, customer C, $18,000, February, South, customer D, $12,000. Our goal: determine total revenue by month and region. Step 1. Format the data. First, we highlight our data and convert it into a table. Shortcut: Control plus T. Why? Because tables make our analysis easier. Common beginner mistake are leaving blank rows or inconsistent formatting. Example, January, Jan, JAN. Excel sees those as different values. Consistency matters. Step 2. Add a total revenue calculation. At the bottom of our table, equal sum D2, D5. This gives us total revenue. Step 3. Sort and filter. Now we can filter specific regions, specific customers, specific months. This helps answer questions quickly. Example, what customers generated revenue in the East region? Step 4. Create a basic pivot table. Insert pivot table, rows, region, values, sum of revenue. Now we instantly see revenue performance by region. Common mistakes. Mistake number 1, including blank columns. Mistake number 2, mixing formulas and manually typed values. Mistake number 3, not checking the totals against the original source. Always reconcile your results. Now, let's apply Excel basics to a real controller scenario. Imagine we are completing the monthly financial review. Leadership wants to know, how do we perform versus budget? Our report includes department, budget, actual, variance, variance percent. The first step is calculating variance. Formula, actual minus budget. Positive variance means spending above budget. Negative variance means spending below budget. Now calculate variance percentage. Variance divided by budget. This gives management context. A $25,000 variance might seem large, but if the budget was $5 million, it may not be significant. How Excel improves decision-making. Instead of saying, operations is over budget, Excel helps us say, operations is $25,000 unfavorable versus budget, primarily driven by overtime expense in 3 locations. That changes the conversation. Now, leadership can take action. Maybe we build department summaries, location analysis, payroll trends, revenue forecasts, KPI dashboards. The spreadsheet becomes a decision tool. Now let's build a more realistic controller model. Scenario, we manage a company with multiple locations. Our data set includes location, revenue, labor cost, operating expenses, customer count, employee hours for Baltimore, DC, and Richmond. Now we calculate KPIs. Gross margin, revenue minus labor minus expenses. Labor percentage, labor divided by revenue. Revenue per customer, revenue divided by customers. Revenue per labor hour, revenue divided by hours. These metrics help identify operational trends. For example, location A has strong revenue but poor margins. Why is that? Maybe labor costs are too high, pricing is too low, productivity is below expectations. This is where Excel moves from reporting into analytics. Analytics that helps us make informed decisions on how we run our business. It determines how successful we can be. Troubleshooting and quality control. Even experienced Excel users make mistakes. Here are common issues. Error number 1, broken formulas. Examples, #ref, #value, #div/0. Always investigate errors. Do not hide them. Error number 2, incorrect data inputs. A formula can be correct, but the data can be wrong. Use validation checks. Examples, check totals against source reports. Confirm dates are accurate. Review unusual changes. Error number 3, hard-coded numbers. Avoid typing assumptions directly into formulas. Instead, create an assumptions section. Example, tax rate, 25%, growth rate, 5%, then reference those cells. Quality control checklist. Before sending a financial report, verify totals. Check formulas. Compare to prior period. Review unusual variances. Confirm source data. Have another person review when possible. Accuracy builds trust. Practice exercise. Here is your challenge. Create a simple budget versus actual analysis. Download the practice workbook and complete these tasks. Convert the data into an Excel table. Calculate total revenue, total expenses, variance, variance percentage. 3. Create a pivot table showing revenue by department. 4. Create one chart showing performance by department. Then ask yourself, what business question does this answer? Because the goal is not creating spreadsheets. The goal is understanding the business. Today we covered the foundation of Excel for finance professionals. You learned Excel terminology, spreadsheet organization, basic formulas, tables, pivot tables, variance analysis, controller applications. The most important lesson is this. Excel is not just a calculation tool. For finance professionals, Excel is a way to turn data into decisions. Whether you're building a budget, forecasting revenue, completing a reconciliation, analyzing payroll, or preparing an executive dashboard, The fundamentals matter. In the next episode, we will build on this foundation and cover formulas every finance professional should know, including lookup, SUMIFs, if statements, index and match, error handling. Make sure to download the companion workbook, complete the exercise, and practice building your own financial models. Thanks for watching the Excel Controller. Don't forget to like and subscribe. See you next time.